So I've been talking about the top 10 global companies in terms of market capitalization and how that list has changed dramatically over time. In fact, you can see a couple of videos about those topics if you follow these links here. Now, today what I want to talk about is how this changing dynamic guarantees that if you are a passive market capitalization weighted index investor, you will not get the optimal best returns out there. Okay. Certainly you could do worse, but you guaranteed will not have superior returns to other investments. Now, to prove this to you, what I want you to do is I want to go back in time, 2011. And I want you to think about this. So you have ExxonMobil, it's the largest company, followed by Apple, followed by PetroChina, et cetera. And if you're a market cap investor, what you're going to do, because ExxonMobil is the largest, you're going to have the biggest weight in that name, and followed by Apple. And what I want you to do is I want you to watch how Apple and ExxonMobil behave. You could slow this down and watch Microsoft, for example. You're going to see the exact same thing unfolding as this whole list changes. But so if we go forward here, have the biggest weight in ExxonMobil, you would want that name to be the outperformer because you have the biggest weight in it, right? Followed by Apple. But if we go forward 1 year, what we see is now Apple's the largest company, which means that it outperformed ExxonMobil enough that its market capitalization became bigger than ExxonMobil. But you held more of ExxonMobil and less of Apple. So you had the exact opposite of what you wanted to have for an ideal type superior investment. Okay. If we go forward again here to 2013, they flipped again. So back in 2012, you had more Apple than ExxonMobil, but Apple underperformed ExxonMobil. And it was the one that you had more of a weight in. So again, you underperform kind of the ideal situation where you would have held more of the asset that ends up outperforming. We go to 2014, we see the same kind of flip-flop. So you held ExxonMobil at the biggest weight, it ends up underperforming a lower weighted name. Now, this is in fact always going to happen. The best investment you can have, of course, would be in this situation would be to hold the market cap weights of the future now, and then this dynamic would of course reverse, but this always happens. Okay, with certainty when it comes to market capitalization, right? Any name in general, if it ends up underperforming, then it was something you overweighted relative to something else that outperformed, which you underweighted. This always will happen. That's just mathematically a certainty. So by definition, this will happen in your investments. Now, you're essentially kind of buying high and selling low. You get the same kind of returns you would get if you do that. Now, of course, the big thing is, of course, we don't know which assets are going to be the ones that outperform and which ones are going to underperform. We just know mathematically you're going to hold the wrong weights. Also, of course, you could do worse than the market capitalization weighted weight. So you could overweight versus market capitalization the names that end up underperforming, and vice versa with outperforming names. That is true. And we don't know ahead of time which names are going to outperform or underperform. We just know that mathematically this is a certainty. Okay. So with that, good luck out there. Have fun trading. Have fun with your investments. Thanks so much for listening.